Hey guys, welcome to another Trade Genius podcast. Bob and Phil here as always. Guys, the consumer is a real big problem. We've got a major company failing, and we're going to talk about that today. Let's dive in.
Trade Genius.
Hey everybody, it's Bob with Trade Genius. Usually I do fun ads. I talk about our service, but I want to be serious with you for a second. We've been helping a lot of people trading for a long time. As you can see here, I want to let them do the talking for me for a change. But most importantly, we want to help you too. If you've not joined our service yet, come check us out, tradelikeagenius.com. Full service. We have chat room. We have the algorithms for you. We give trades out every day. We educate you. So go to tradelikeagenius.com. Check us out. What you get out of our service is much, much more than what you put into it. And we'd like to see you in the room. Thanks for listening.
All right, Bob. So I think this is a problem of the consumer and also kind of failed policy at the state level, but I'll let you talk about it. But this company that we're going to discuss been around a very long time. And, as we've seen with other companies that have been around through a couple of recessions, things are a little bit different this time, it seems, because they're not making it and we're not even in a technical recession yet.
Yeah, Phil, we're going to talk about today is Walgreens. Walgreens is closing 2,000 stores, but that's just their latest salvo of store closings. We talked a couple weeks ago about Rubio's closing about 3/4 of their stores. All these companies are trying to right-size themselves in their survival, Phil. And what happens is the stock prices are not supporting, their future profitability and cash flow. And they're just getting absolutely obliterated. And really, there's a lot of reasons for Walgreens. And I'll kind of go through them. The reason that they're citing inflation is crushing their profit margins. And what I mean by that is that their wholesale prices are increasing and the customers are not letting them pass on the price increases onto the retail price. So what happens is that even if they put those prices down, Phil, people don't have to buy them, right? And you got major big players out there that could simply destroy Walgreens. You have Walmart, you have Costco, you have Target, you have CVS. And basically, Walgreens has no place to go. So, that's number one. Number two is it's ill-fated. You remember when Home Depot and Lowe's were going at it? Lowe's tried to expand like crazy, try to beat the incumbent. It's almost like what Starbucks did to all the other coffee companies, try to get as many corner locations as you can so you can just block everybody out. Well, that's what happened with Lowe's, right? And then Lowe's had to massively reorient their business approach. And then you have Walgreens, the same thing, trying to grow through the incumbents. They were a very good niche player, mom and pop neighborhood kind of place. And then, Wall Street helped them to try to grow. And then you have this situation. And then finally, the consumer, they can't absorb this anymore. And so there's just too many stores out there. Now, the implication goes far beyond Walgreens because I think we're going to see this across the board, Phil. I think companies are sitting back saying we can no longer absorb losing or underperforming store units because you're not getting paid anymore for revenue growth. You're getting paid for cash flow growth. And I think a lot of these guys are just going to be bailing out of stores that are not performing. And what that means is, again, low-end employment gets destroyed. But every time Walgreens closes a store, and a lot of Walgreens are anchor tenants, some of these strips, and you put all these real estate properties at risk now because you lose an anchor tenant, all the smaller stores in that commercial strip suffers because traffic falls, and then that commercial strip probably, if they're part of a larger REIT, it just causes cash flow issues because a lot of those guys riders in their contract that says, hey, if we lose the anchor, the price that they pay for their monthly rent goes down as well. And if not, people are just going to simply leave, Phil. And I think we're just going to see this now in spades. This is going to be I guess what we call instead of the Great Depression, we should call this the Great Retrenchment. And I think you have a chart that shows the Walgreens stock. It's not as though this was a surprise. And what's interesting here, and I'll let you jump in, is that, look, it broke some vital price action well before all this stuff. And we would have not been in Walgreens in this environment. We would have not been here for the death knell. You would have got out far, far higher and you would have been just watching from the sidelines. You have any thoughts?
Yeah, first of all, on this chart, you don't touch it. When you have a terminal decline like this and the fundamentals are in terminal decline as well, you basically are going to need the fundamentals to improve, and that's going to be reflected in the chart. And this is a weekly chart, and it'll be reflected in the chart when you put in a bottom, and that looks like a series of higher lows and higher highs on the weekly. Then you can start looking at, buying the dip on this thing. This is not a stock or a chart that's going to V reverse off the bottom, sometimes like you see with the stock index. This is going to take time to bottom out, so I wouldn't be quick to rush it. And especially with what we think is coming over the next 18 to 24 months, they're going to be lucky if they're even solvent by then. I think we have an economy that's contracting. I also think that the lax policies on shoplifting has also been a factor with these companies. Even Target, which isn't in a bad situation like this, is expressing things like, hey, it's affecting stores. Stores are gonna have to close because the shoplifting is so out of control now. And that's part of that's just kind of the world we live in right now. Morals are degraded. Part of that is economics, right? People might feel a little more desperate, but the fact of the matter is, at the bottom line, the enforcement on that is just to the wayside. So one way or another, that's probably going to self-correct, because you're going to lose these stores, right? If they're truly pulling out just to cut costs or cut losers, then local municipalities are going to not have the convenience of these stores in their neighborhood anymore. And so that'll probably force local government to change and, go after that shoplifting stuff more aggressively. But by and large, what you said is that the economy is contracting. You're having a retrenchment, kind of like what we see with the banks, right? Consolidation of that business sector. And I think that will continue. We'll see further consolidation. And, that's the stuff that you do see from time to time as the economy and the business cycles rotate. You do get these consolidations. And then on the other side of that stuff, you'll see, expansion again. But it's healthy because people have to stay competitive, right? If you always have this easy money policy, such as we've had over the last 14, 15 years, how competitive is management going to be? And you have a whole, I would say, management generation now that's been doing nothing but out of school in easy money policy environment, and they have no idea how this is going to go now that we're back to 4 or 5% interest rates. And then, there's a big lag, right? Small businesses have to re-up their financing. They're facing 5% financing now versus 0 to 1% or 2%. And that's a huge, huge hit on the business model. So I think we're going to start to see the lag effects of the rate hikes. And it's funny because as we start seeing the effects of the rate hikes, they're going to going into a rate cut regime. So pretty wild next 24 months. I think a lot of things need to be addressed in the economy, in policy, and we'll see it play out in the business cycle, but it may be a larger bust than we're used to seeing when we do get our recessions.
Yeah, what's so ironic about this? There are people get paid a lot of money to make wrong decisions.
Yeah.
I mean, it doesn't take a freaking genius to know that you have an aging population that's being squeezed at the margin, and you have people out there pumping expansion instead of focusing on profitability, and all because it's the Wall Street narrative. If you don't keep growing your revenue, you're going to get crushed and blah blah blah. And so a lot of guys didn't want to take the small medicine and maybe take a 10 or 15% haircut on their stock price to shore up their profitability. Now they're taking 75% haircuts. But then again, it's the way that the compensations are set up. That president, that CEO, he's probably pocketed millions of dollars, and so what, this last one, he doesn't get anything. You know what I mean?
Right, yep.
But he's already rich. And it's the people that are passively investing are the ones that are taking the hits on this stuff. It's really a shame. But Phil, man, we are on the front end of this. I guarantee you that.
Yeah, agreed. All right, guys, let us know your thoughts on the comments below. As always, appreciate the views and the likes. Smash those buttons, and we'll see you guys on the next video. Also, check out our stuff over at tradegenius.co if you'd like to be with us in the rooms. We'll see you on the next one. Take care.
Trade Genius.